Yo, what's going on, guys? It's Lewis here with Crypto Elite, and I'm going to do another market update video right now. And then in this video, I'm going to be going over the charts, and I also want to go over all of those fundamental indicators that I used to go over pretty much every single week, because I feel like I haven't done that in a while, probably because I just think that we're going down and the macro, is so terrible that it's pretty much we're in the gutter until further notice. But it's probably a good idea to go through those. So in this video, it's going to be all about technicals. And then in the next video, it's going to be about those fundamentals. So I'm going to start off with the total market cap, go down into the dominance levels, Bitcoin on the monthly, the weekly, and then try to get in some trades. And I guess we'll just get right into it. So on the total market cap, what I like to do is start off on the monthly right here. Go to the monthly chart. You can see I pointed out a lot of key levels right here. I pointed out the 2020 to 2021 yearly close and open, which was going to be my buy, but unfortunately it might look like we hit it, but we actually did not hit it. So never ended up buying during this 2020-2021 yearly open and close level down there because it just simply didn't hit it, and I waited until it hits. So did not buy that. And then the 1.2 trillion, this is the major support resistance level right there for the total market cap that we have. And I was thinking that we were going to come up here to the 1.2 trillion. And then, that's when I was this would have been a really good confluence with Bitcoin at around $27,000, $28,000, $29,000 and Ethereum around, I think it was 2,200, 2,300. Basically all the levels that I plotted out, this would have been perfect. But of course, front ran like usual. Or not like usual, but I guess we were front ran and all the big buyer or all the big sellers came in and just crashed the market. So not gonna lie, a little disappointed in that. Really wanted to see, at the very least, this right here, this level of 1.185 trillion be hit, because that's technically, the up move before the down move that I guess broke market structure, if you count this as market structure. But regardless, never hit it. So now that we had this pretty big fall, honestly, things do not look good. So I'm really a lot more bearish now than what I was previously, and I'll be looking for shorts. So like I said, this was my original, but I don't think we're gonna get back up here now, because if we do, if we get all the way back up here and create a new high, or a higher high, then that obviously would be extremely bullish. And so I just went down into a lower time frame and basically gave the gist of what happened. And this, you could see this on the Bitcoin chart, on the Ethereum chart, you can see this on all the different charts. We're in that steady uptrend, broke it to the downside. So now we have this fair value gap that I'm really wanting to price to come back up into. So I'm thinking we, come back up into here and then just fall back over and eventually reach the, lows again. If we don't fall over right here, then I'll get stopped out on whatever trade that I put on, and probably end up putting on a trade somewhere right up here to go down. Sorry, not that was pretty bad. But somewhere within this range to go back down. And that's going to be the general consensus for pretty much everything. So that's the total market cap. Let's look at total 2. All right. So looking at total 2, same thing when it comes to just getting front ran and honestly being a little annoyed at the markets and having things not go exactly as planned, because what I did for this was I took the Fibonacci from the move, from the top of the move down to the bottom of the move. That's the whole Fibonacci right there. And then look for the 38.2. Typically, when things are either extremely bullish or extremely bearish, it'll, in the bearish case, retrace up to 38.2 and then fall back down. In the bullish case, it will retrace back to the 38.2 on the way down and then, shoot back up. But this got halfway in between the 23.6 and 38.2. And, I've been doing Fibonacci for a long time. So, and it's my favorite. It's literally my favorite. So, maybe there was another area to take the Fibonacci from, but I really don't see it. And the 38.2, sometimes you win, sometimes you lose, or sometimes you call it, sometimes you don't. But typically, this is how I've been able to be so precise in my past, is by using the Fibonacci. So this was just honestly a pretty weird level. Like, I understood it from a technical standpoint of why we fell, you know, from this level, simply because obviously Bitcoin was at $25,000. If we go to excuse me, let me do this chart. If we go here, Bitcoin was at 25K, and that's a big psychological number. Ethereum was at 2,000, and that's where it fell from. That's a big psychological number. Okay, I get that. And the stock market was just under the big resistance, you know, 1 tap, 2 tap, and then this was going to be the 3rd tap. But once again, I was really thinking 61.8 was going to get hit for this entire move, possibly taking the Fibonacci from here to here. But even that went above this 61.8. So that's why right there just made a lot more sense to me, even if we brought this down just a tad. That never happened, and we'll go over that in a minute. But yeah, that was basically the total 2. Let's go into the dominance levels real quickly, even though the dominance levels have not been completely accurate as well. But with saying all of this, there are definitely going to be plays to be had, and this is exactly what I was talking about in my last stream, or not my last stream, but my last market update video, is that let's say I have, you know, certain plays, right? And for Ethereum, I think I said, okay, Ethereum, I'm buying at 1700, right? I was like 1700, I think it was 1715, 1750, literally all in the lower 1700s. I was like, all right, I'm buying. Well, I bought, and then eventually ended up having to sell a little down here because like that was my risk. But the thing is, I was prepared for that because I had my risk predefined. So let's say I bought like right here, right? And then I had to sell down here because I preemptively bought. If looking at the market in hindsight, then it's like, okay, I bought, but I knew exactly how much I was going to lose, and I was comfortable losing that amount. So whether that's 1%, 2%, 3%, 4%, or even 5% of my portfolio, at least I know what it's going to be, you know? And that's really what you have to do when trading, is you have to understand exactly how much you're going to lose beforehand and be extremely comfortable with it. Hopefully though, we could start making some pretty solid gains. You just have to keep on going with it. That is another thing that I want to mention. I've read a lot of books on like trading, and what people don't realize is that you could have losing weeks and even losing months in trading. But if you have a system that you back tested and that works, that is profitable over a long enough period of time, it's really difficult to stick with it when you don't want a losing streak, to be honest, because you're like, oh man, like it's simply not working. And so if you do go and have a certain number of losses in a row, then yeah, take a break and sort of like revamp and back test more and, you know, test things out, make sure you're doing everything correctly. But if you do lose, you can't just completely scrap the system that works, you know, super well, unless it only works super well in one type of circumstance, like one type of market. So there's things that work really well in upward momentum trending markets, downward momentum trending markets, and then ranging markets. So those are the 3 different types of markets. So you need to have particular strategies for all 3 different type of markets. And that's where things, I think a lot of people sort of mess up, is that they'll have something that works really, really, really well in, you know, this upward trending market, right? But as soon as things, you know, crash down, it does not work as well. And it probably works to the detriment, or it doesn't work to the detriment of a lot of their portfolio. And then even, let's say right here, like this last little thing that we had in June and July, this was a range. So we weren't really trending up or down. We were sort of just ranging. And maybe the thing that works when things are going up and the thing that works that goes down doesn't work when we're trending like this. So it's really important to play level to level and choose the type of trades that work depending on the market circumstances that's actually happening. And with saying all of that, let's get back into the chart. charts. So I'm on the total, the market cap for everything that is not Bitcoin. So the top 100 cryptocurrencies minus Bitcoin. And it comes back up into this big resistance right here. I honestly, I would probably just want to get out of the market or maybe just short. And this lines up pretty well with the fact that September is really bad. It's a really bad month, typically speaking. So for all type of equities and pretty much everything. So I want to get out of the market as close to here as possible. This was another reason why I was like, okay, well, maybe we'll get another push up. So if we do get a push up in here, I'm just going to be like pretty much selling everything for the, when it comes to the dominance levels. And then for Bitcoin, if the Bitcoin dominance comes down here, that's when I'm going to be, de-risking everything and going back into stables. Those are like my main areas for the, when it comes to dominance levels. When it comes to the total market cap, the main area, I mean, if we somehow miraculously come back up here for the total market cap, then I'd want to get out of like everything for my trading, for my like longer term investment portfolio that I just basically like dollar cost average into and pretty much just like restart. But I don't think we're gonna come back up there too. This is too far away. I think that the only thing to do really, like if you're trying to trade, is to play level by level. Because I've been trying to play these longer term swing trade plays and like they just haven't been hitting as well. Like the Fibonacci's, like I said, the Fibonacci's. That's what I do. I do the Fibonacci. And I use the 38.2 and I use the 61.8. Like those are the Fibonacci's. Even on this last move down, 38.2 was right here. It was $34,000. So I said, all right, I got in like right around here, 27, 28. I was like, okay, cool. $38.2 is 34K. Gonna get out here, and it just never hit. So yeah, that's been my strat. That was the strategy that worked. Like the Fibonacci has worked so well. Like literally this entire range over here, this whole range over here, this whole range down here, this whole range up here, calling the top. Even once we broke 60K, like I knew the Fibonacci worked, and I said, all right, 30K, 40K, 30K, etc. I knew that was the top because of the Fibonacci, but recently, I gotta say, Fibonacci just has not been it. So that's why I've been actually looking into other forms of trading. It's the thing that I'm looking at right now is, I guess you could say it's shorter term, and it's called the ICT method, and that has been actually pretty successful. So that's what I'm gonna be doing from now on. I'm gonna be doing a combination of the ICT method plus my own personal thing with the RSI, the MACD that I use, and potentially the Fibonacci, but I will be giving a lot more exact areas basically. So before I would do something like this, where I would take the Fibonacci from the top to the bottom, the bottom to the top, say, okay, 61.8 is right there. So I would, map this out, and I'd say, okay, 61.8, perfect, because it lines up with this previous support zone. And, we came down and we hit the 61.8, but then we fell right below it. We fell below it. But now what I do is I plot out that level, and then I'll go down into the lower time frames. And once I see something develop, then I'll be like, oh, okay. And so if something happens, then I, go down and I look for better risk reward within the areas. I'm definitely selective on the plays that I'm going to do. I don't want to just try to go in every single time. Like if we're in a range, for instance, if we're top here, and let's say bottom here, say mid right there, something like this. If we're not in this zone down here, somewhere down here, or somewhere up here, I would rather wait if we're in this type of range. Or if I'm playing the range, like this, bottom, mid, top, then this would be the top, and I wouldn't want to really play anything unless the price comes up here, and then I get a really good entry because I could see what's happening on the price action. Okay, so I think we could actually start getting into the charts now. So I'm looking at Bitcoin, starting off on the monthly. Nice bounce for Bitcoin off of the 78.6 21.6, but obviously on the lower time frames, things are not looking too good. I mean, I would assume that 28,000 would be on the table, but given what's just happened, not too confident anymore. And we can't really do anything else for the monthly other than just say that the monthly close was $19,943. That was the monthly low close. Then we have on the weekly chart, let's move in here, clean this up a little bit by out here, putting this right there, putting this right there. Okay, so on the weekly chart, I honestly don't really see much except for if I take the Fibonacci from the bottom, from this bottom to this top, 61.8, it looks like, I guess we came off of that. And then 22.666, great number right there, is the bottom. This is the order block, the up move before the down move that broke the market structure. So I would say that this is the first level that I would be looking at to start shorting. Ultimately, I am thinking it's going to turn over, but this is on the weekly. So let's get a little bit more granular with it and go down to the daily. Okay, so on the daily time frame, we have the 22.666, which is inside of this breaker right here, and let's go down to the 12-hour just to get a little bit more detailed. So yeah, that's right here, and I think that we will come up to fill a little bit of this in before ultimately heading down. Obviously, this break in this trend line was really bad, and then of course the break in this first right there, and then right there, and then of course right there. So 3 breaks in the market structure on this candle, and then finally like this candle had these 2 breaks. Yeah, I want a little bit of a move up for 4 to 5%, and then I'll be looking for shorts in this area right here. Of course, unless something happens on a lower time frame or just something looks very, very bearish. So let's actually go down into a lower time frame and see if we could pinpoint anything out. The thing that I do want to say is that on the 12-hour, we do have a move. The RSI and stochastic RSI are on their way up, and the MACD is just crossing over right now. So usually it's not like these are overbought. This is really high looking turnover right now. So I am thinking like, okay, a move up, that 4 or 5% is probably likely. On the 4-hour, I don't know if you want to call this a bear flag, or if you just use horizontals, then you could say, this was the bottom, and then we had an equal low, and then higher low, and then equal low, and now a higher low. So we're making higher lows. That's good. And this was the high. This was the high. This candle right here on the 4-hour, this is a swing failure pattern above this right here. So that's not good. However, I don't really want to take a short right now, because I would much rather wait until this level to take a short than just immediately like go for it right now. I guess if we go down into the 1-hour time frame, maybe let me try to figure something out here. Yeah, so if you're thinking, okay, so we ran this high right here and then closed back below it, and then we had another swing failure above here as well, then it's going down. This is a possible play. I mean, you could say also that this whole area is like a top area, because obviously there's top right there, and then lots of wicks right there, and then wicks right there. So within this area, yeah, it could essentially be the top of this move. It's such a tough call, because like, I don't know, I don't want to, I would much rather wait until we get to at least up in here, because this level right here it has a lot more confluence. Like for instance, right there, it has this, and yeah, I don't know. I'm just thinking a move up would be better. This is a possible play right now. To me, it's not the highest probability play, so I don't think I'm gonna take it. Now, given that I do think we will reach this level up here, and we have been making, higher highs and higher lows, I don't see an issue with actually longing to try to snag a long. So I wouldn't be opposed to actually trying to get a long in at 21,270 and, try to get up to here. This is a great, this is a 6.3R trade. So I will be putting this trade on. I think this is a pretty solid trade right here, actually. And that will be my long trade setup if if it hits. If that doesn't hit, then what I'll do is looking at the 12-hour. This is obviously what I want to do is I want to short. So I'll look right. The best short is definitely like 23,200. It's like up here. So it's hard to say. I'd probably, maybe I would do this and then hold on a second, but that's not in this breaker. So I would try putting on a couple shorts. So this is the one, this is like the last one that I would do basically before it, my thesis becomes like completely invalidated. Before I even do that, I would put on a short somewhere over here at, what is this? This is 22,420. 22,4, put this like this, 22,420. And my stop would be somewhere, I don't know, I don't know where my stop would be because I simply I need to have the price action basically. That's what I would do if my long doesn't get hit. Let me go to the 4-hour. Maybe I could see it better. That's what I would do. Okay, so basically I added the reasoning for the trade right here. So I said there's a swing failure pattern on the 1 hour at the resistance, plus the indicators are in the overbought territory. They're in the overbought side. So that's why I think we could drop down to the 61.8. Technically though, we're making higher highs and higher lows. So, plus there is the fair value gap, all up here. So that's why I think we should move up. And that's the reasoning behind the trade. So I just decided to add that. And with that takes care of Bitcoin. So now let's move on to Ethereum. Okay, so for Ethereum, let's go to Ethereum on the monthly chart, check it out. So Ethereum had a great month in July and looks like it had this, it's only 24th of August. Well, not the only, it's the 24th of August. And it looks like we had a SFP for this monthly open. So that is pretty bearish, not gonna lie. Really wanted to get up to here. I took the fib from the top to the bottom. 38.2, great area, but with the merge coming up, I was really thinking we would get at least to the 50, and that's where I was gonna take my profits at $22,223, $2,223, somewhere around there. It also lined up really well with this previous support resistance area. Obviously, we had a lot of trouble up here, so really difficult to say what's going to happen. But yeah, basically on the monthly, that is what I'm looking at. There's not much you could say. If it comes up here, obviously I would want to get out of my longer term positions up here, and definitely if it ever reaches 2,500, just underneath that, my longer term positions. This is also the reason why I have this chart and why I go over these things, is because I have my separate accounts. I have an account that I just dollar cost average into Ethereum and Bitcoin every single day. And I don't look at it, but I want to say that most people, they just dollar cost average and that's it. They just dollar cost average forever and they never touch it. But me, I like to dollar cost average, and then if there is a really big jump up to a key resistance level, such as this level like 2,500 for Ethereum, for instance, that's when I would actually sell, and then I would just restart the dollar cost averaging procedures. While most people just would keep dollar cost averaging all the way up, all the way down, all the way up, et cetera. So this is just a separate strategy that I have, and that's why I like looking at these monthly levels and the weekly levels, just to see the higher time frame stuff, so that I could always keep in mind, I need to unload the longer term stuff, because even if it never reaches this, then it's like, okay, I'm fine because I'm just dollar cost averaging, and I'm going to win either way because it'll keep on going down. Let's say it keeps on going down, never reaches these levels for my big account, my investment account. Okay, well, I continue dollar cost averaging all the way down, dollar cost average down in this zone, maybe even lower my average cost basis. The next bull cycle, boom, shoots up, and I could make massive profit, make even more profits. So that's just a little side note of what I personally like to do. And so this is Ethereum on the monthly. And so, that's pretty much it. Maybe if I take the fib from the top to the bottom, we could see something. Not really. Honestly, not really. So let's go to Ethereum on the weekly, see if there's anything else. I marked out the area for when the merge is supposed to happen. So once again, I took the fib, from top to the bottom. 38.2 was at 1,911. And maybe if you took it from, here to here, 38.2 was, 1990, $1,990, basically 2,000. But I mean, I took it from here because that was the low. It didn't really line up. This did line up. I guess you could say that this lined up pretty well because of the fact that, this is the 38.2. But regardless, I have been saying, this big SR level right around, 1700, basically 1690 to 1740, this whole area. I just figured, if we're above here, because boom, 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 above here, all this stuff is huge support. So if we're above it, I was more prone to being long. If we're below it, I am more prone to being short. And given the fact that we closed back down below it, now I'm definitely more prone to trying to thinking that we're going to continue lower. And, I want to look for shorts. So this is definitely the main area to look for short setups. But given what I saw on Bitcoin, the fact that I do think that Bitcoin does have a potential, 5% move up, that gives us a little bit of a move up. And this was a huge move down, for Ethereum. So I wouldn't see a problem of us coming up. And this is the weekly chart, so we can't really see everything. But if we go down to the daily, we'll be able to get a little bit more, granular with it. So now that we're on the daily chart, we could look for areas to break down. Okay, so going to the 12-hour, technically speaking, we did have a low here, followed by a high, a higher low, a higher high, higher low, higher high, I guess higher high, higher low, higher high, higher low, higher high, higher low, higher high. And then finally, right here, this candle right here broke this market structure on the 12-hour. So that was the first bearish looking, possibility. And then right here, this candle that happened right there, this is what actually broke, this low right here, which was the actual, 12-hour low. So as soon as this broke, that means, and this broke pretty cleanly through this area. Typically, this is an order block area because it just broke straight through it. Now it could be classified as a breaker, but I'm not convinced that this is it. Is just going to rally this much? What was this? This is a 10%, 11%, pretty good. But what I would really love to see, honestly, is this up here come back up to 1814. That would be the best. But I also don't think that we have enough steam in the tank to come up there. So maybe the Fibonacci could give a better area. And yeah, looking at the Fibonacci, what I see is, honestly, I like the 38.2, but I also like the 50%. I've been seeing the 50% come up so many times. And so that is the 50% retrace into this basically fair value gap right there. And then that would be what? Yeah, 6-7%. So that lines up with my thesis that Bitcoin will, go up 5% or so. And if Bitcoin goes up 4 or 5%, then Ethereum should go up 5-6%. And so this is the area that I will be looking to short. It's about 1777, pretty nice number. Also, this is basically, it's a little above like that huge number that I plotted out before, which was basically right here, 1725, because that was this, all of these lows right there. But yeah, so maybe the 38.2. Honestly, maybe to 1717. Yeah, I'm looking at the RSI. RSI still has some room to move up, and so does the stochastic, and so does the MACD. So I'm going to stick with this, and this is going to be the trade that I'm going to put on because clearly defined. I'll try to get in at the 50%, just under the 50%. My stop loss will be above here because the most ultimate entry would be right up here around 1800, 1820. That's the ultimate entry, but I don't know. I don't think we're going to reach there. I'm going to have this be my trade setup. So it's right in the middle. And the other thing I want to look at is Ethereum against Bitcoin, which basically I'm looking at this, like I see this huge support right here, lots of support. And then eventually when it did break through it, it acted as resistance and lots of resistance before breaking through it again to the upside. So I still think Ethereum has another push, another leg up to go against Bitcoin. I really would love to see it come up to, this level right here. Wait a minute. No, that was the 61.8 from this top to this bottom, 61.8%. Boom, right there. That was basically the top right there. All right. So yeah, I'm basically still thinking a little bit of a push up for Ethereum. I mean, at least to this level right there, at least to this order block, which is the candle before the down move that broke this market structure right there. So yeah, I would think that it could go a little bit higher, and that's what I'm hoping for. Maybe it won't get into this red zone because it didn't really get into this red zone and things are looking a little weak. So probably won't. But for Ethereum against Bitcoin, I'd probably put on a short position, something like this, and then target something. I would target this area like that. Actually, I would target this area. Assume that we would eventually break these lows, like break the lows to the low, right? So, and I mean, if we do that, might as well target down here for being real, because yeah, I'm gonna do that. It's a good enough trade setup. It's such a good trade setup so that like I'm comfortable, selling my Ethereum into Bitcoin to try to make 30% more Bitcoin, if that makes sense, which it does. So, yeah, because this was also, this was a really big resistance. Like this whole area was like really big resistance, right? And we broke above it, which is really good. But then like, I don't know, we broke back below it. It's not too good. So sort of has confluence with the other levels that I was looking at, move up before move down. So that is what I'm looking at for Ethereum against Bitcoin. Okay, so yeah, that's pretty much Ethereum. So now let's go to the S&P 500. And like I mentioned last time, we had this huge trend line that we were coming into, and that's where we got the rejection from. So now this looks sort of like head and shoulders forming, and that's really bad. So I was expecting it to come, I was sort of expecting it to come up here, but now I moved my target down here. So if the S&P 500, does come up to this level, I would probably just exit all of my markets, because I would think that there's just going to be too much resistance either here or within the next, 2-3%, because now it's like, let's say it does come up here, right? And like there is a small rally. Well, now you have this horizontal resistance plus the previous top that we just had plus the diagonal resistance. So this isn't even an option anymore. Like that's not even an option. Like right here is like this would be the ultimate shorting opportunity. So actually, let me write that. Yeah, so that would be the ultimate shorting opportunity that I could see if the S&P 500 does come back up there. I should probably make this red, or let me do this. Yeah, there you go. So this is the S&P 500 looking absolutely horrendous. That's basically my take on this. And yeah. Okay. And I will end this off with the NASDAQ and the dollar. So this is the NASDAQ, 100, this is the same thing, NASDAQ right here. And so if I go back to this chart, this is what I was talking about with the Fibonacci, how it works so well most of the time. But apparently not so much in crypto. Maybe I should trade the NASDAQ, because I took the Fibonacci from this top to this bottom, plot out 61.8, boom, it hit it perfectly before retracing. This is literally the exact thing that I was thinking was going to happen with Bitcoin and Ethereum and other things like that. Although I wasn't assuming the 61.8, I was assuming a little bit maybe the 38.2 or at least the 38.2. But this is what I was talking about when it comes to the Fibonacci, like how amazing it could be. So it's just so precise with the NASDAQ. So now that we hit that, and then we did get the break of the market structure right here on the daily, I would assume there's either two things, like two plausible things. One is like that, it would, eventually go much further down, but the other thing could be up to there before going back down. Just, I don't see it moving up. Like, I don't see it making a higher high. So that's the big thing right there. So really, I'm going to hopefully get this. I'm sort of banking on this, and that would be, I guess you could say never mind. I was going to say it was like some type of like head and shoulder type of deal, but I guess if you want to say it is, could be like that, although this shoulder is pretty damn low. So regardless, I think this is what I would want. Honestly, is what I would want. It just looks, oh God, it looks terrible. So that's the NASDAQ. I am thinking that eventually, I took the Fibonacci from this bottom to the top. Let me do this. Yeah, like that. And the 61.8 is right around 10,600. So this is where I would want to, flip my bias, be a little bit more bullish. Like if it ever reaches this level down here, that's where I would really like to be more bullish on the NASDAQ and also on the S&P 500. 61.8 right around 3,100, 3,200 area. That's where I would love to really go in more. Although I was just thinking of the chart of the, the psychology of a trader chart. And they say that it goes all the way up and then comes all the way down below the previous low before, having the mean reversion back up to the new cycle or whatever. I don't think it's going to do that, but because this is the March 2020 low, which is before the pandemonium happened, that caused all of this, run up, which was great. And, but I don't know, it's a little scary because like, look at this was even right here, run up followed by a move down, below the lows before the move higher. And then if you look at this, this was basically the low, and then move higher, run below the lows before the move higher. So, but it's not going to run below the low. Like, it can't just continue to run below the lows and run all the way up. That would make the volatility just way, way, way too much. I mean, even back here, ran the lows before moving higher. But back here, like, this was the low, and it didn't really run these. Like, these were higher than this. So that's very selective. And then obviously if you scroll even further back, here's the low, here are these lows right here. These did not go below this. So looking at it like that, it doesn't always run the previous lows, although it did right here. In the 2008 crisis, ran the lows of the .com bubble, basically. The COVID crisis ran the lows of the previous, 2019. There wasn't really much like a huge crisis in 2019. If there's another ridiculously huge crisis, then yeah, sure, run the lows. But man, there would have to be something really big for this, that like America, the world would have to just be destroyed, like economically, for it to lose. Seriously, that would be I would hate to be in the market. I'd just go, it's like at that point, just go get a job or something, or just invest as much as you possibly could, take out loans, do whatever you can. I don't know, not financial advice, but yeah, that's probably, that's going to be it. That's going to be it for this video. Take a look at Sol. I would love to buy Sol. They're saying $3 Sol now. If Sol could come down here to 24.5, like that to me looks like a good buying opportunity. And maybe if, Litecoin comes up back to this. I always like shorting Litecoin. Litecoin's always the one that I look to short. So like if Litecoin could come up to here, then I would, that's what I'll do. I'll put on a short position for Litecoin. So I'll just like do something like this, and I feel like this would be a pretty solid short. And you got to look at like this is a 31% possible gain on a Litecoin short. But on Ethereum, possible 42% gain on an Ethereum short. So most of the time, the shorts on the altcoins are more or better than Ethereum and Bitcoin. But I mean, in this case, it's actually not. So that's why you should always look to see what the, what the exact, also this is better RR and everything. So yeah, never mind. I usually like shorting Litecoin. The EOS though, I do remember, people talking about EOS. Where would I want to short it? I mean, look at this. This was the big support area right here. Let's see if I can scroll back if there's anything else on EOS. Weekly time frame. Yeah, I mean, this was the biggest support on the weekly time frame. Fell below there. So this is like where I would basically short. I would look for shorting opportunities in here. Look at the daily. I didn't see one on the daily, on the 12-hour, on the 4-hour, on the 1-hour. Honestly, I'm surprised that this didn't fall even further. I'm surprised that this is even moving up, like how it's moving up right now. I don't know what's going on with EOS, but it is like, it's not bad. Let's look for a shorting opportunity though. Yeah, I would say for EOS, this would be the best shorting opportunity because it's the this is basically a stop hunt right here. Excuse me. This candle right here is a stop hunt. And this is actually something that I learned is that if you have a big move up like this or move up like this, right? And then you have another candle that shoots up above it and closes above it like how this did. What you could do is you could put on a conditional short order to short the market as soon as the price touches this previous high, this level right here. So it would open up a short on the way down right there with your stop right above there. And so if I was going to short EOS, I would probably just have my short position up. I would have had it already if I saw this. And if I was going to open up a short right now, this would be the short that I would look for. Yeah, I would look for a short like this. I mean, technically you could put on a short position right here. The only issue is that with Bitcoin, I'm thinking Bitcoin's gonna come down and then move back and move up. I think Ethereum is gonna reach this level as well. So I wouldn't. Yeah, I don't know. Maybe a short. Maybe putting one. Actually, sorry. Where is it? Maybe putting on a small short position on EOS just in case like Bitcoin and Ethereum do turn over. Could be an option. It could be a play. I probably wouldn't. I don't know. This is a pretty tough one, but yeah, honestly I'd probably just do this. Because look at how overbought the RSI and stochastic RSI are, and even the MACD is. So yeah, I'd say this is a pretty decent short setup after such a huge run up, 51%. It's like, what happened? Why? Like, why? I don't get it. Anyway, I'm going to stop here. So that I could go into the fundamental stuff and make another video about the fundamental indicators that I look at, like the R-hodl ratio and MVRVZ score and stuff like that. And I'm going to make a video on that to see like where's the bottom. Personally, I think the bottom is going to be like 14K or something. Yeah, I don't know. I feel like the bottom is going to be much lower than. I don't think that 17K was the bottom. But we'll just have to wait and see. That's all we can do. Anyway, hope you guys enjoyed this. I will talk to y'all later and have a good one.